Hello, this is Merrill with Tax Tutor. Today we're going to talk about state apportionment. This becomes an issue when clients have either property, payroll, or sales coming from multiple states. Now, a lot of you might think like, oh, I'm good, I don't have any property in other states, but that could become an issue. We'll dive into some of the details and go through that. Now, the important part with the multi-state apportionment is that if you trigger what is called Nexus into another state, that's what gives that other state the right to impose tax on you and your business. And that Nexus gets triggered by having employees in another state, having property in another state, or now it can be triggered by having a high enough sales rate in another state. Going back several years ago, it used to be that you had to have some kind of physical presence in a state. You either had to have an employee or you had to have property in another state in order for Nexus to be triggered and for you to be taxed in those states. That goes back to some court cases that were back in the 90s called Quill. And Quill said that you had to have some kind of physical presence in a state in order for that state to tax you. Now, as we fast forward a number of years with the internet and being so prevalent and the easiness of getting sales in multiple states, the states started to raise this issue again. They said this isn't fair that you have companies that can basically sell things into our state, and even though they don't have a presence, they don't have employees or property in our state, they're still deriving a lot of sales and a lot of income from our states, and we believe that they should be paying income tax and sales taxes in our state. So there was another Supreme Court case, a case that made it all the way to the Supreme Court, and the court then decided, okay, there can be something called economic nexus. And economic nexus basically means that even though you don't physically have a presence in a state, that state can tax you because you have now reached a certain sales threshold. And that sales threshold can either be a dollar threshold or it can be a number of sales threshold. And every state has adopted different thresholds. There is kind of a standard. The standard out there is about 100,000 in sales or about 200 transactions. That's kind of the standard that we see a lot of states, but every state can set its own. So it's important to look up sales tax nexus for each state, especially this economic sales tax nexus. So even though let's say that your business is physically located in, say, Utah, but you have sales in California, you have a number of customers in California, let's say that you're selling into California and you're being paid $100,000 of sales coming from California. Well, even though you have no physical presence there, you have no employees or property, California might say, well, now that you've reached this $100,000 in sales threshold, you are now subject to sales tax and income taxes in California. And so that is how it works with multi-state nexus. It does create kind of an issue that if you are subject to sales tax or an income tax in a specific state and you're not paying it, those states can come back after you anytime and assess those taxes on you. And that can become a really difficult and an onerous type of thing. Another area that's important to pay attention to is property, and property that you might have in a specific state. This was one that came up recently that I had read online. It was a friend that owned an accounting firm, and she talked about that they had this Nexus study that was done for one of their clients, and this client was a seller on Amazon. And as a seller on Amazon, they had inventory that was being held in different states because Amazon has these really large warehouses. And so in order for Amazon to deliver product within a day or two of somebody ordering it, they must have huge warehouses all over the US that can get that product into somebody's home within a day or two of the time that they order it. And so if you are an Amazon seller or you work with an Amazon seller and this Amazon seller has inventory in some of these warehouses, depending on where those warehouses are, that can create a nexus. So let's say that Amazon has a huge warehouse in New Mexico, and you have inventory that's sitting in New Mexico, even though you don't have any employees in Mexico and you haven't reached the economic nexus, the threshold that we talked about. Let's say New Mexico's threshold is $100,000 in sales or 200 transactions in New Mexico. Let's say you haven't met those thresholds, but you do have inventory that's sitting in a warehouse in New Mexico. Guess what? That triggers Nexus in New Mexico. You now owe sales tax on all sales to New Mexico, and your business will be subject to income tax in New Mexico based on the sales that you make in New Mexico. So that's something to be aware of and be careful. Years and years ago, I worked at a really large firm in Salt Lake City, and that firm had a client that sold physical products, and they sold them inside of Costco warehouses. So now the way that Costco works is that when you sell inside Costco, Costco doesn't actually buy that inventory from you, or at least that's how it worked with this client, this customer. The client still owned all the inventory that was in the Costco warehouses, and they were in every Costco warehouse in every state in the United States. Well, guess what? That created Nexus for them because they had inventory sitting in Costco's in all of these states, and we had to file tax returns in all 50 states. They were subject to sales tax in all 50 states, or at least the states that had a sales tax, and subject to income tax in states that had an income tax. So not all states have a sales tax, and not all states have an income tax. So you don't often get triggered for all 50 states, but a good portion of them you can trigger income tax and sales tax nexus in that sort of way. So that's something to just be aware of, to be careful of when it comes to that nexus, is watching where you have employees, where you have physical product, and now you got to watch the sales. And so if you're having sales in multiple states, it's good to look up that. You can just do like a quick Google search for economic nexus thresholds. There'll be websites that pop up and will kind of have a map of all the different states and show you where you can and cannot trigger nexus. So if you're working in multiple states and you're concerned about this nexus triggering that, that's something that you can reach out to your accountant, or reach out to us here on Tax Tutor. You can comment in our video here down below, or we also have a way that you can learn more about taxes. If you go to taxtutor.com, you can sign up for our weekly newsletter there. We also have an online community in school where you can, again, at taxtutor.com, come and join us in that community where you can ask questions. We do trainings. You can network with other business owners and learn what is working well for them and what's going on in their business. Maybe you can talk with other business owners that are having the same nexus issue and having to file in multiple states. It's just a great community to come and join. So we look forward to seeing you there.